right? Let's get right into it. The Indian market is kind of holding its breath today. And really, the big question is, which way is the Nifty 50 gonna break? So let's decode the signals for October 1st, 2025, and figure out what the charts and the data are really telling us right now.
So what's the play? I mean, it's the one question that's on every single trader's mind this morning. Are the bulls going to take charge, or is this going to be a day for the bears?
Well, the short answer is you're going to want to be cautious. Pretty much all the signals are pointing towards a bearish or, a negative session ahead. It really looks like the sellers have the upper hand as we head into the trading day.
Okay, so why all the caution? Where's this feeling coming from? Well, the story really starts on the charts. To understand today's forecast, we've got to decode the key technical clues the market is giving us.
The main technical pattern we're seeing right now is a classic bearish trend. In simple terms, what that means is the Nifty has been making a series of lower highs and then lower lows. That pattern is a super clear signal that, for now, sellers are in control and they are the ones actively pushing prices down.
Now these numbers, these are the key battlegrounds for today. The best way to think about them is like a ceiling and a floor for the market. That ceiling, or what we call resistance, is this really tough zone between 24,750 and 24,800 that the market is just struggling to punch through. And then you have the floor, our immediate support, which is down at 24,600. That is the line in the sand that absolutely needs to hold to prevent a bigger slide.
We can also kind of see the mood reflected in the India VIX, which is basically the market's fear gauge. It's ticked up just a little bit, so it's not panic, not by a long shot, but it does signal a growing sense of nervousness among traders. You can just feel that caution is in the air.
Of course, the main index doesn't tell the whole story, does it? The market is really a battleground of all these different sectors, and right now, there's a very clear divide. Let's take a look at which areas are actually showing some strength and which ones are facing the most heat. So there are some definite pockets of strength out there. We're seeing public sector banks, metals, and the auto sector all showing some pretty positive momentum. But that's being canceled out by weakness elsewhere. Realty and consumer durables, for instance, are facing some significant selling pressure. This split just goes to show you that even in a cautious market, it's never just a one-way street.
Now let's zoom out a bit. No market operates in a vacuum, right? And today is definitely no exception. To get the complete picture, we need to look at all those external forces, both global and domestic, that are shaping how traders are feeling and thinking. So, looking globally, the picture is, well, it's a bit murky. European markets are sending some really mixed signals, and while the US indices did see some mild gains, there's no strong tailwind coming from international markets to give our own market a really decisive push.
And then, back here at home, we have two big factors weighing on sentiment. First, the foreign institutional investors, the FIIs, are still selling. And second, pretty much everyone is holding their breath, waiting for the RBI's next policy decision. That uncertainty alone is enough to keep a lot of investors just sitting on the sidelines.
Okay, so we've looked at the technicals, we've seen the sector rotation, and we've checked in on the external mood. Now, let's put all these pieces together into a clear, final forecast for the day ahead.
So here's the game plan for today. Step 1, expect a cautious open, probably flat to negative. Step 2, be prepared for some swings, some intraday volatility. And step 3, the really big test for the bulls is breaking above that 50-day exponential moving average. Until that level is cleared, the short-term trend is going to remain firmly in the seller's favor. And that leaves us with the critical question for today, doesn't it? All eyes are on that floor at 24,600. Are the buyers going to step in and defend it, or do the sellers have enough juice to push the market even lower? That is the story to watch today.